The IPO market turning highly negative in recent months. We've seen 16 IPOs this year compared to the 60 that we saw at the same time last year. Of those 16, almost half, are trading below their IPO price. So when we see some light at the end of that tunnel, Kathleen Smith, co-founder of Renaissance Capital, she joins us now. So Kathleen, it sounds like we're definitely in the tunnel right now, but you do say that there's some light. How far down the tunnel are we, and where does the light come from?
It is a little hard to determine the timing, but we can look at a few things. I mean, the IPO market had such a stellar 2020. Our Renaissance IPO index was up over 100%. And then in mid-21, we had the Fed talking about tightening and also now the war in Ukraine. So returns on IPOs have suffered. Of the 400 IPOs that were priced last year, 80% are trading below their IPO price. So the days of entrepreneurs getting showered with capital are over. The IPO market has basically shut down for new issuance. And it's been about a month and we have not seen any IPOs. We have to look back at some other times like this to read the tea leaves on how we come out of this. For example, some of the worst, I guess two of the worst corrections we've had in the IPO market, the longest ones, have been after the internet bubble burst and around the global financial crisis. When the internet bubble burst, it took about 3 to 4 months before we saw any IPOs. So the IPO window could be closed for a bit of time. After the global financial crisis, we went through a period where only one IPO was priced in a 6-month period. So now we're on month 1. What we're looking for is the already public companies. They have their valuations have been significantly cut, and investors are going to start looking at the already public companies that have come out and the fact that they're at lower valuations. One way to study that is to take a look at the Renaissance IPO ETF. And as that ETF starts to outperform the overall big benchmark indices, that will set the stage for this recovery. Typically, the outperformance will be very strong when investors get confidence to come back in because the returns on IPOs will be much better on these companies that have been cut in price so much during this period.
So, Kathleen, there's a lot of macro factors that are obviously impacting IPOs. Looking at your ETF, for example, your ETF down 3% since the Russian invasion of Ukraine. But there's a number of other factors, including pretty much rapid inflation. And also what Jay Powell is saying is going to be a potential, not a potential, but a rate hike coming up. How much is that impacting the IPO market right now?
I think that the talks of the rate hike have already been factored into stocks. So between that and just how they're going to navigate, because now I think investors are looking most of all at how do we figure out what companies are worth if they're going to be impacted by this, not just rates, which impact the present value of future cash flows, but also company pricing, the cost of goods, and those kinds of things, which are going to vary by company. I will say for a lot of new economy stocks, which are in the IPO index and in basically IPOs tend to be the faster growing new companies. Those will come back and those tend to do well. They can grow their revenue even with an inflationary economy. So if they have strong businesses, they still will be able to come out. I heard your prior guests talk about cyber. We have a couple of cyber companies. CrowdStrike is in the IPO ETF. We're seeing coming up those kinds of companies and probably more defensive names that will come out when the market recovers, and we're going to see a kind of different set of companies try to tap the market, and they will be very strong companies at very attractive valuations.
Yeah, we'll have to keep our eye on the IPO market and also your Renaissance IPO ETF. Kathleen, thanks for joining us.